Sure looks like the US economy is now being pressured. Is the stock market actually telling us that we're going to see a collapse? Is that is that what's going on here? The market is selling off pretty hard, a lot more than people expected. We are below the 50, the 100 moving average, okay? Now, what is this coming from? Why are we seeing all this weakness? I'm trying to figure this out on, macroeconomically. What's going on? I thought the GDP came in yesterday at 4.9% for the third quarter, much higher. But here's the kicker. Here's the kicker, right? GDP for the fourth quarter is now coming in at 2.3%, right? So the estimates have came down tremendously for the fourth quarter. So now the S&P has to price in lower GDP, which means what? Lower earnings. But there's a kicker to that, right? There's also some other stuff when it comes to stocks. Who's going to win here? Either way, growth is now revised lower. Now there's a contraction in growth going into the fourth quarter, going into seasonal spending, and the market is freaking out, right? The market is freaking out in some segments. Is the S&P as bad as the Qs? Not really. The Qs did also drop, but it's not that bad for the Qs, right? Now, here's the positive backdrop. If growth is weaker, we shouldn't see the dollar surge. Okay, maybe it does, maybe it doesn't. Also, oil demand is down. Now, this is also the other worry too, on top of GDP being revised much lower, is if the war continues to break out, the government keeps spending, the fear is inflation goes higher. The fear is that oil goes higher. If oil goes higher, gasoline prices are higher, consumer confidence is much lower, consumer inflation expectations for the next year are also higher. So if you get a contraction in growth in the fourth quarter where everybody spends, and then Q1, it really falls off and goes negative, there's your recession, and oil prices are higher, the war raves on. That is the recipe for disaster, right? That's a recipe for stagflation. And, I think the market is trying to price in a lot of that weakness. But the upside is, 30-year yields should be coming down. Why would yields go higher if growth expectations are lower? Should the Fed actually pause here? Right? That's the question. The VIX is at 21. You want to see VIX below 20 if you're bullish and above 20. So the bears are winning at the moment. Okay. But getting back to it, S&P at 410, selling off pretty hard. Let's take a look at the 30-minute chart and see it's breaking below a lot of lot of resistance. Okay, wow, next support 405. It looks like Mike Wilson's going to be right. Mike Wilson's going to be right. He was right about earnings falling off a cliff. I don't know if that's going to what up Val BTW. So it looks like earnings might be falling off a cliff. Now let's take a look at the data we got today. Let's go over the macro economics that we got for today. We'll come back to the charts. But here's what we got coming in today. So for the consumer, bring this on the front. Okay, so for the consumer anyways, click on the charts here. I just have them all lined up for you, right? So yeah, the consumer. Let's bring this over here. First off, core PCE. Are we going to start with inflation or do we start with, no, let's not start with inflation. Okay, I'm going to back up here. Let's start with the consumer report and then we'll go to inflation. So here's what we got for growth. Again, keep in mind this whole time the market is weak, right? Strictly, I think, because GDP forecasts are coming down significantly from 5.3%, which came in for Q3, right? So actually July, September, the third quarter is going to be stronger than the fourth quarter. That doesn't add up. But if that's the case, then the market has reason to actually sell off here. So part of the macro, the consumer / GDP report that we got for this past month, right? Past month, consumer spending continues to hold steady despite consistent declines in confidence and sentiment. Okay, so personal spending is up, right? Month over month. This is the strength. Personal spending is up. Can we see? I want to make sure we can see. Yeah, personal spending is up. Personal income down, right? A little bit. Not, it's not negative. We're not negatives in I don't think we see personal income really roll over unless employment really starts to take a hit, which could come in Q1, but not yet. Personal spending up though. People are spending, okay, but the consumer savings rate has been falling consistently since May, right? So what is that? This is either people are paying off their debts, right, with their savings, or they're spending with their savings, or both. We don't know exactly, but the market is saying, okay, less savings. There might be $1 trillion of savings, but that's coming down. Okay, now the GDP growth rate for the last quarter was way stronger than people expected. So there is money in the system. The economy is still growing. Okay, it is still growing, but you see we went from 2.7 all the way down to 2.1, big upside move. Now we're expected to come right back down to 2.1. Right? That's what the market is struggling with now. Are we going to have lower growth, lower earnings? We do have to revise earnings down lower. That's the problem here. Now the consumer sentiment is down. Consumers are seeing their financial conditions, the future conditions of, the market, the economy lower. All right. And this has been trickling lower for a while. And I think the real question here is for consumer conditions and sentiment. Are people more worried because they think the economy is going to, fall apart, or is it the war, right? Is it the Middle Eastern conflict that is, basically getting in people's psychology that, oh, gas prices are going higher. It's going to be turmoil. We're going back to, 2001 when we invaded Afghanistan. Is that the fear, right? Is it the economy, or is it both? Could be both. It could be both. But either way, all eyes on the labor market. Okay. Well, here's the thing. The bears are calling for peak growth in Q3, and they could be right. They might be right. But that doesn't mean stocks have to go lower. We're going to explain why when we get there. And the other question is, can baby boomers boom the economy in the fourth quarter? Right? They have all their grandchildren, their children that they can spend on. They have a record high of, asset income from dividends, from yield, from fixed income. Right? There's a record number of money in fixed income. So can the baby boomers boom the economy? Not sure, but all eyes are on the labor market. There's not going to be a crash. There might be a contraction. Obviously, we're expecting that, but not a crash unless employment really falls apart. Now, here's the upside, right? Going to inflation, core, month on month did bump higher, okay, on a month over month basis, but it's right in line. I mean, the spending was high. Of course, that makes sense. Now, core PCE, this is the Fed's preferred inflation gauge, year over year, still falling. And it came in line. There's no surprise to the upside. Headline is whatever. We know oil prices, it's going to depend on oil prices. Headline was whatever. 1 year inflation expectations. This is where consumers, I think, are really worried about how the war is going to impact energy prices going forward. Big upside move on the 1 year. Okay, big upside move on the 1 year. The 5 year looks like a big upside move, but it's really just matching where it was the past 6 months, right? On average, where the 1 year expectations going forward, because, people are thinking about, okay, the Ukraine-Russian war was pretty elongated. If this is elongated, how high do gasoline prices go? That's going to affect the consumer, but it also contracts spending to some degree, right? So inflation is coming down on the core side. Expectations are higher, so that's going to mess with, consumers, at least for the most part. And I would say either way, core is still tamed. So that brings us to the market. That sort of brings us back to the market. How is the market going to address this issue? How does the market look at this issue? We'll get to that. And let's take a step back here. Am I going in circles? Here we go. Oh, okay. Yeah. So, and here's what Goldman Sachs said. We're launching our Q4 GDP tracking estimate at 1.6%. So they have a 1.6% quarter over quarter estimate for GDP, above our standing forecast of 0.7. So they actually had it forecasted lower. They're increasing it. It's really confusing. They're increasing their forecast, but it's much lower than Q3. And remember, everybody was expecting, the consumer savings rate to run out. That got revised up $1 trillion. There could be a growth, there could be an expectation higher for growth. Doesn't mean we're going to break 5%, but it could mean that growth is not as bad as people expect, because there is still employment, right? Employment is the key here. And but the forecast is lower, right? And they're removing what government shutdown as our base case. Yeah, no government shutdown. Now for the market, let's see, are we going to get to the market? Yeah, let's get to the market. Let's get to the market. Okay, now here's my expectation for the market. I think what we're going to do is let's flip this to the actual chart so we can see the charts as we speak this through. right? So we're on S&P. Wow, selling off into the close, selling off hard into the close. There's a lot of fear here. Also, I guess we got to keep in mind that I think we got to keep in mind, what was it? There's some more airstrikes. The U.S. sent 900 soldiers. The U.S. just sent soldiers over to the Middle East. So it feels like the escalation is happening. It is. It is happening. The escalation is happening. Is that at a critical point where it, implodes? I don't know. So the war is accelerating. The expectations are negative. I think it's a lot of fear. Does it materialize into something worse? Possibly. We don't know that. You got to put that on the back burner. Of course, you got to add that into the risk. Now, for the most part, when it comes to the stock market, we're looking at S&P here. Let's go to the daily chart. We have broken the bear market, the bull market trend. So we're not in a bear market. Here's your bear market, right? If you take a look here, let's go to the weekly so that those candles are a little more clear. Maybe we're headed back for the 200 moving average on the weekly chart. Ouch. But there will be buyers there, especially when things start to clean up a little bit. You're going to be in negative territory at 384, right? For SPY, 384. Once you get to 384, that's a negative 20%, right? So you have a ways to go down here, negative 20%. Now you're in a bear market. You're back in a bear market. So the bull market is not here, but we're maybe in a neutral sideways market until things start to cool off a little bit. All right. So the market is pricing in a contraction in Q4. We know that. We just heard that, right? From 4.9 to 2.3%. And that'll probably change going forward. There's going to be GDP now. The Atlanta GDP forecast changes on a weekly basis. So we're going to get but anyways, it's at 2%. So that's a drop. Okay. Less growth equals less core inflation though. All right. So if growth comes down, core inflation should be coming down. That's X energy. That's X oil prices. So just remove oil prices. Inflation looks better. Okay. The real question is this a net positive or negative for the stock market? Right. I see less earnings growth going forward for stocks who don't have pricing power, who don't have the premium checklists. There's going to be less growth from them, right? IWM getting crushed. These are small caps. Why? Because they're credit sensitive. They have to refi. So interest rates are high. They already don't have growth. They're getting crushed. Demand is set to be lower. Not good. But we saw Amazon crush expectations, Meta crush expectations, Amazon revised up. So some of these big stocks, Google up, Google missed on cloud. That's it. Microsoft crushed it. So big tech earnings are still doing great. They're still doing, I don't want to say great. They're doing good. Okay. They're doing good. They're not falling apart. And this is obviously a flush. We're seeing a flush here, but I think the buyers will step in because the opportunity is, we're just trying to price in the weakness. We're trying to price in the uncertainty at the moment. And if yields come down, that's the bottom. If yields come down, that is the bottom. Okay. Crypto's up, by the way. Why is crypto moving up? And we're going to get over why crypto's moving up. I'm going to end with that because crypto is showing, along with gold, these asymmetric bets are moving up because of liquidity, which we're going to get to. So before I forget, rates should come down, boosting multiples. So here's the positive part about this. Okay, if growth is revised lower, well, why would 30-year rates go up other than a technical trade? Right? Rates should be coming down if GDP comes down. Are they down right now? No, they're not. But they shouldn't make new highs. Oh, we could be wrong about that, of course. But this should cap rates. If growth is down, rates should be capped because inflation is not going higher. Okay, the only way rates move up is if oil starts to explode. But for the most part, a war is going to cause people to buy more treasury bonds because the U.S. is the the prevailing force in the global economy. Okay, and if the yields peak, we should get dollar peak. By the way, the dollar technicals are very weak. You'd have to have a real, I think you have to have some real like nuke stuff going on for the dollar to really run off. Here's the thing. Dollar, buying pressure is weak. Although the price is kind of trying to pop higher. So, well, actually that doesn't, let's put it this way. If we look at we look at the previous high on the dollar, here it is. Okay. Well, the closest high, you see how we get this little decline? Well, look at this buying pressure, much steeper to the downside. So the buying pressure is much steeper to the downside. It could bounce here, but I still think it's pretty weak. I think it's pretty weak. It's basically trending lower. The buying pressure is trending lower while the price is almost where it was. It's pretty up there. It's not the best bearish divergence, okay, but it is some positivity if you're depressed. Maybe that's a positive tone, okay? And if growth does come off, well, the dollar shouldn't be moving higher because rates should be coming down, right? Here's the other part. Oil. Now, this is a wild card still, but oil is not really making new highs. Okay, it's still on the uptrend that started in June. It's still on the uptrend. But if oil doesn't really spike, okay, and I know it's like, okay, pricing the worst thing possible, but if oil doesn't spike, and also there's a video, there's a couple investors saying, not investors, but a couple, I think it's Citibank's energy researchers saying, hey, supply is up, demand is down. If the US economy is rolling over, demand is down. China's not, really, China's stimulating, but their economy is not, it's the manufacturing cycle is not up. There's not a whole lot of oil demand yet. And then if that's the case, oil could just move sideways. That's good for inflation. Okay, that's going to be positive for inflation moving forward. So rates should come down, boosting multiples. If rates come down, okay, if the 10-year, let me see the 2-year. The 2-year is making, the 2-year is not making new highs. We're pretty capped here in the 2-year rates. Short-term rates are capped, 5-year, 10-year. We'll keep our eye on the 10-year. The 10-year looks like it peaked. It looks like it peaked. And if this is the case, then the premium stocks who have pricing power, strong brands, pure revenue growth, okay, margin retention, cash flows. What am I missing? Share buybacks. We'll see if NVIDIA buys back shares. If those companies, right, where they are now, their growth is still pretty sticky. If the yield comes down, that's going to boost earnings multiples, right? That means the future cost to grow your earnings is lower, so your earnings go up. So that is the bull case here going into the fourth quarter. The dollar falls, that's a tailwind in general because everything's priced in dollars. That's a tailwind, okay? The Fed is done. Here's the big one. The Fed might be done. I think they are done for the year. For the, especially if GDP is lower, the Fed is done, okay? Because the Q3 forecast was in Q3. If they're looking forward in the forecast, the Fed, Atlanta Fed GDP is lower, at almost cut in half, the Fed is done. If the Fed is done, rates should also come down. So what are the two things that gets rates down? Well, GDP forecast down, okay? The war picks up, bonds pick up, rates down. Also rates down because the Fed is done. So valuations start to improve here. So the dip buying will come. The dip buying is going to come. The market is extremely oversold and oil is tame at the moment. Oil is still tame. Oil is still tame at the moment, right? So it's a stock picker's market or an asset picker's market here, right? That's what we're looking at, an asset picker's market. If we go to the Qs, okay, the Qs did drop. Like everything looks treacherous. Everything looks extremely bearish and treacherous. And by the way, it is, right? The Qs are dropping all the levels of support at the moment. Doesn't look great. Although Tesla, I think already, priced in most of the negativity. Tesla is trying to find support here at this 200 level. I think this was the low for me, 200. Still finding some support there because it kind of already priced in most of the weakness. I know EV growth is due to fall. EV growth is due to fall a little bit more, but we saw that Ford is missing expectations. Ford, Stellantis, GM, they're all pulling back on their production. So that's a win for Tesla in my view. And so I'm still bullish on Tesla, of course. Look at this big wedge pattern. This is a bear flag. I get it. It's a bear flag, but it is Tesla. It is oversold, right? Look at this extreme oversold. It's starting to climb. And I think Tesla moves up, right? Only because the market's oversold, extremely oversold, and it should bounce at some point. We're at the bottom of the RSI, right? We're at the oversold territory. We always get a bounce. It just takes time. It takes time, but it should be a rapid bounce. It's really, hey, how is the war going? Do I have XRP? I do not have XRP. Yeah, Dow got smashed. Okay, I missed some of your guys' stuff here. Dow got smashed. And again, GDP got revised lower. Keep this in mind. Look, if you guys learn anything today, GDP got revised lower. Okay? GDP for the fourth quarter is coming in It's an estimate at 2.3%. Always go check Atlanta Fed GDP forecast or nowcast. Okay, it's at 2.3%. So yeah, the last quarter was strong, but this quarter is supposed to come in weak. Okay, it's supposed to come in weak. That's why the market is down. And that's why the market's been down, because estimates are coming down for GDP, which means earnings growth has to come down but also valuations come down so the premium stocks can hold in here. Okay, and we're going to get to crypto. I want to really get to crypto because crypto is outperforming for a very good reason here. Okay, and this is the next chart we're going to look at before I hit all the questions, Q&A. I'm out early today. I got to be out we got 20 minutes. Hit me with your questions. I got 20 minutes. We got 20 minutes, so hit me with your questions, okay? I do not have XRP. The reason I don't have XRP is because I have Chainlink. Why do I want XRP when XRP's use cases? XRP, first of all, is older than Ethereum. XRP doesn't have smart contracts. It's a ledger. It's a copy of Bitcoin. It's a ledger. Central banks, the whole thesis for XRP is that central banks want to use XRP, but they don't. They want to use their own blockchains. They're not going to risk going into XRP with that liquidity. They're huge. They're transacting trillions of dollars. They're not going to use XRP. Find me one article that shows Swift, DTCC are using XRP. You're not going to find it. They're using Chainlink's CCIP to interoperate. So to me, XRP is trash. It's fundamentally, the price will go higher in the bull market because a rising tide lifts all boats. But do I want to get caught holding XRP? Hell no. It might not even make it all-time highs. There is no the use case for XRP is pretty much over with. When will market correct turning upward? I think there's a lot of fear here. It's like an over-exaggeration. But here's the thing. Look at this global liquidity is picking up, by the way, right? This is M2 supply. This is the money supply from the five central banks, the money supply from the ECB, the European Central Bank, from the Bank of Japan, the PBOC, the Public Bank of China, obviously the Fed. And really it's China driving this. The ECB the ECB, the European Central Bank, just paused rate hikes, which increases liquidity. Okay, if they cut, it really increases liquidity. But China is really hitting the brakes here. China is spraying liquidity. So global liquidity is picking up. This is the chart right here. It's grinding higher from the cycle low. And what is that? This is why crypto's is going higher. I've been saying this the whole time, that when global economies weaken, liquidity picks up. It is not the reverse. Liquidity starts to pick up. If something breaks in the U.S., liquidity picks up because the Fed not cuts rates, but the Fed will reliquify, right? The balance sheet is going to go up a little bit, and you get that reliquification. So things are dire. And when does the market SUG what is SUG? I don't know what SUG means. So yeah, the market does look pretty dire here. It does look pretty dire here, but global liquidity is picking up. There's a bull market somewhere. If we look at the actual indexes, I want to take a look at this, because who's set to actually improve here, right? Who's set to actually improve here? Make sure we didn't miss any other posts. We might not get the rally till November or December, but we're gonna get a rally. All-time highs is now in question. Okay, I was bullish. I was all-time highs, but this was a big sell-off. We're gonna have we need a violent rally. We need by the way, when I said seasonality, year-end rally, that was before the war broke out. Okay, now that the wars broke out, it's kind of sucks. It's like, damn, okay, well, the war has to end. I don't see it ending anytime soon, or any type of negotiations. Hopefully it doesn't accelerate, but we're still going to get the rally. We're still going to get a Santa Claus rally. We'll get it, just maybe not to all-time highs now. Okay, that you got to shift you got to change when the data changes, and the war is really a concern here. The war is definitely a concern here. So Amazon, right? Let's look at some of these individual stocks. AMZN, is that what we're going to look at before we get to your CBDC question? Oh, Amazon, big gap up. Yeah, listen, Amazon crushed expectations. Google, Meta crushed expectations. Guidance is relative for Meta. Guidance for Microsoft is up. Guidance for Google is whatever. I already said that. We're waiting for Apple. Microsoft is strong. And I'm probably repeating myself. Tesla's weak, but it already priced in most of the weakness. Tesla's stronger than the overall market, by the way, right now, too. It's holding up. And Amazon crushed expectations. Okay, they're doing well. So the mega cap tech is still, the Magnificent Seven, in my view, will still perform going into the fourth quarter, because if those yields come down, they can still grow their earnings. and that increases, that boosts the multiples on their earnings. That boosts the multiples. Period. It boosts them. Period. They're not concerned with consumer growth. It's all business growth. It's all Inflation Reduction Act, fiscal policy, fiscal spending at the same time. So Magnificent Seven still boost higher, right? Now to your XRP question. Oh, what up, dog? What up, dog? Uh, like December 380. Okay, hold on. Give me some clear comments. Will CBDCs have a negative effect on the stock market? No, it'll have a negative effect on PayPal. This is why I think PayPal is really getting crushed. Everybody is like, why is PayPal getting crushed? Because CBDCs are coming after these fintech companies. What does that mean? This is why I'm bullish on Chainlink. It means that they can do everything that PayPal does. Square, Cash App, Robinhood to some degree, right? Robinhood has a little more. So they can do the same thing cheaper, faster, and more efficient. Instantly, right? They can do it quicker. Yes, you lose some privacy because now you're directly connected to the government, but they're going to crush PayPal's business model. This is why PayPal, in my view, is selling off. This is why. So segments, CBDCs will crush segments of the stock market because it's a better, it does better. It's cheaper, it's faster, it's more efficient. How do you capitalize on that? Chainlink. The CBDCs only work with CCIP, with Chainlink's technology to interoperate with other central banks, right? To interoperate with blockchains in general. So that's how you find an edge here. Okay, so everything is getting crushed, but what have we been saying this whole time? This is a quick, to Chainlink. Look at Chainlink. Chainlink is up 70%. Okay, it's up like 80%. Let's go to the 4-hour chart really quick. Chainlink is up, and it's stronger against Bitcoin. It's strengthening against Bitcoin and Ethereum because it has the most use case of all cryptos. Okay, of all cryptos, has the biggest use case by far. I'm going to call it 15 more minutes. Keep hitting me with the questions, okay? I'm going to show you some Chainlink price action here. Global liquidity is picking up. Maybe this breaks down. I'm going to buy more at 10. If it breaks down, I'm buying more at 10. Simply because, look at this. Chainlink versus Bitcoin, big wedge pattern. This is Chainlink versus Bitcoin. If you guys want to know more, then let me know. We'll do a stream. I'll bring my brother on. But this is Chainlink versus Bitcoin, strengthening against Bitcoin, forming a huge bullish wedge pattern. We told you guys at 6, we told you at 5 that Chainlink was going to go higher for fundamental reasons, not just because it's a coin. For fun, it's been leading the bull market, by the way, in crypto as Bitcoin breaks out. Okay, that's Chainlink versus Bitcoin, so it is gaining dominance against Bitcoin. Against Ethereum, same thing. Gaining dominance against Ethereum, right? Big wedge pattern probably breaks out this weekend because global liquidity is picking up, because it doesn't care about U.S. growth. It cares about global liquidity picking up. It cares that China is stimulating liquidity, period. Okay. SPY coming down to 430 like December. 380. Okay. SPY coming down to 380. Look, David's products, maybe it does. Maybe SPY comes back down to 380. Do I see it coming back to 380? I was wrong. I didn't even think we'd break the bear market trend. But what did I say? By the way, I was wrong. Only that was my probability. But I did say this. If the dollar was above 105.50, my thesis doesn't work. If oil is above 83.50, my thesis doesn't work. If bond yields break out to new highs, my thesis doesn't work. That's been the case the whole time. So if you want to hit me, I already have a response for that. I told you the macro forces need to be in favor of the S&P, and they're not risk on. They've been risk off this whole time. So I've been wrong. But I told you where I'm wrong, right? We already know that. So the big surprise that would surprise me was AI and the economy being stronger. Thoughts on bank stocks this month? I'm not interested in bank stocks. I think they're trash, to be honest with you. I think they're all trash. Crypto is going to outperform everything at this point. It's going to outperform everything. And it's going to have big, large pullbacks also. Okay, it's going to get crushed. That's where you buy. When it gets absolutely crushed, that's when you buy. You don't buy when it's breaking out to all-time highs. You buy when it gets crushed. This is cycled. You got to look at the cycles here. And I know if you don't have TA, that's fine, whatever. We're coming out with the course pretty soon. And you still have a chance in crypto. Bitcoin could run up to 40K and then retrace all the way back down to 30K. So you're going to have opportunity here. Sorry for skipping you guys on YouTube. Amazon and Intel are up. Yeah, Intel, great earnings. What is Intel's ticker? INTC, right? Intel had really good earnings, and Intel has an advantage here because it doesn't really compete with Nvidia and AMD. It competes with Taiwan Semiconductor, competes with somebody, chip makers, like pure chip makers when it comes to the picks and shovels. Uh, I don't really, I'm not familiar with the chips. I just know they're more so competing with Taiwan Semiconductor. So Intel, big gap up. It's still strong. Why? Because it's going to benefit from the CHIPS Act. It's going to get a stimulus check. The government is incentivizing chip makers, right, by giving them some type of stimulus boost, and Intel's going to benefit from that. So yeah, Intel, whatever. Intel's going to do great. Amazon crushing it, especially Amazon in the fourth quarter. They should do pretty well. What up, Tigger Media? What's your thoughts on how Apple's earnings will be? You know what? I don't know. I'll be honest. I do not know. I think it depends on how much China. Maybe they have crappy earnings, but I think Apple's. Here's what I would say. My guess is Apple has been pricing in the downside. This is how markets work typically. Call me out if I'm wrong, but typically, we see earnings come in, stocks are selling off. I think it's a sell the rumor. Earnings collapse, buy the facts, earnings didn't collapse. I think that's what's going on here. Apple's down 15% from the highs, almost in a bear market. And I think they're pricing in the downside. Apple is the last mega cap. Maybe Nvidia reports after Apple, but I think it's a sell the rumor and then buy the fact. That's what I think is going on here. I think Apple, regardless, if they miss, I don't think it collapses. I think it's all getting priced in as we speak. The downside is getting priced in as we speak. The war is getting priced in. Higher yields are getting priced in. GDP revised lower is getting priced in. Uncertainty is getting priced in. And once earnings are done, okay, once the Fed has paused, because even the Fed isn't even priced in, once the Fed has paused, once we get the next inflation report, I think the market goes higher. So November probably is the rally. Remember, October is the bear market killer. October is typically the month where the market bottoms. It's not September. September is the seasonally weakest period, and October is where the bear market kills the bear market. Okay, so October, I think is the bottom. I think it's going to be October. Maybe the first in November. I think is going to be October because we have the Fed speaking. Okay, maybe I'm wrong. Call me out. What do you know about Snipe Pro? I have no clue what that is. What up, Mighty King? Yeah, for sure. I'm here for you guys. If you guys want to know, what do you know? I don't know what that is. Always here. If you guys want to know my comments. Hey, it's not for crypto. What do you mean? Let's see. Do you have any recommendations for BTC mining companies to invest in? I would only say heck no, because mining is a very tricky process. I would not bet on any mining companies. Stop going for the short stuff. Well, this is my view. I don't go fishing for mining companies. The best company you could probably have is MicroStrategy. It's a software company. So they're not going to have a whole lot of overhead, as in they don't have to, they're a software company. So their margins are pretty good. They do AI. They do a certain type of AI slash, you could look up what they do. I'm not familiar exactly how to explain it, but MicroStrategy's business model is not going to get hit by interest rates the way the mining companies do, the way that the mining companies do. So I wouldn't mess with the mining companies. I'd go to MicroStrategy. They purely hold Bitcoin. They hold all the Bitcoin. They hold the most Bitcoin. It's basically an ETF. So when the ETF comes out, they actually might have some weakness. I don't know. I would just go with Bitcoin in general. I wouldn't go with mining companies. Unless you can't get exposure, go with MicroStrategy. That's my view on that. That's what I would say for there. Um, so yeah, Apple earnings, Tigger Media, bro, I don't know. I think it might be priced in. We'll see. I'm not the. We'll see. If I get any kind of insight, I'll let you know. But I really don't know. I'm more so of, let's see how the market reacts to the earnings. I want to see the earnings come out and then make my decision there on what I think going forward. I don't really like to guess beforehand and say they're going to be better, they're going to be worse, because there's so many segments, right? It's also going to be, what is their iPhone? There's different segments of their growth. So which part of their growth is going to be up, which part's going to be down is, kind of like Google, their cloud Their cloud did, not as good as Microsoft. Um, but their search did really good. So it depends on the segments, and I cannot put all that information together. I'm not an expert on all the segments of Apple's revenue, so I don't know. I want to see when it comes out, and then I'll determine. Okay, but it looks like technically it's a sell the news by the fact. I think that's what it looks like. And remember, when Apple's 2.5 trillion, so it's going to move the market. It's going to move the market. It's pretty sold off. You could have a knee jerk reaction too at the last second. Oh, my bad. So Doi for Seek Metaverse is a 22x coming up 30. What is this? Is this what is Seek? CEEC or CEK? What is this? Crypto? Is this some type of crypto? Oh, it is. Okay. Well, good luck. Good luck, my friend. It looks like a penny stock. Good luck. I hope it goes higher, but I don't know what this is. I don't know what they do. Maybe give some insight on there. Oh, yeah, give us some insight. What does it do? Clean Spark is a good BTC miner to research. Clean Spark. Okay. And look, I don't know. I'm not an expert on the Bitcoin miners. That's just my overall view. So I'm not going to say don't get them. Maybe there's some good deals out there, right? But I am not an expert on that. I rather just stick with crypto itself. I think there's too many risks for those companies when it comes to managing. I just want to own the asset. There's no friction. There's no I have to pay employees. Oh my God, the building. Oh, our miners. No, there's too many things. I'd rather just own crypto. That's me. And Robinhood, you could literally buy Bitcoin. I'm not advocating that, but you could buy it on. You can buy any amount on Robinhood. I wouldn't mess with the miners personally. If you're trying to get leveraged on it, I mean, crypto's a leveraged. It moves like an option, so it's already pretty much leveraged. It's a high beta asset. What else do we got here? Okay, yeah, I think that's it. Mara, here for you guys that are looking for ETFs. You got Mara, MARA, CLSK, don't know who that is. HUT, don't know who that is. BitF, okay. Is that Bitcoin Futures? Riot, I have a lot of people who trade some of these or who like these. I don't like them. Wolf, so these are all Bitcoin miners if you guys want to check that out. Seek has their own hardware headset. In 2021, they partnered with artists like Adele, Lady Gaga. They played concerts into. Okay, well shoot, they better partner with Taylor Swift, bro. If Taylor Swift advocates any crypto, I'm not even a fan of Taylor Swift. You don't want to. I'll get banned for saying what I really think about Taylor Swift. But if she partners with anybody, by the way, she's a monster. I respect her for business. That crypto's gonna go. I wonder who she's gonna partner with. I bet you it comes because Bitcoin's crypto's starting to take off now, right? Crypto is starting to take off here. We got 7 minutes before I got to go. Throw me your questions. Give me some hard answers. Really, the whole, the real deal here is GDP got revised lower. Okay, there's a lot of uncertainty still for the market. There's a lot of uncertainty when it comes to the war. Are oil prices going to go? Are they going to go higher? I'll give you the bull case. I'll give you the bear case. The real bear case is, let's start with the economy. The bear case is, I don't see employment falling off, by the way, but the bear case is the fourth quarter is weaker than people expect. Earnings growth comes down for a lot of companies. Okay. And I think that's already kind of priced in though. I think the bigger fear is that oil spikes. If oil spikes, it slows down the consumer even more. The dollar shouldn't go higher, right? But it might go higher because of the war. So you get oil spike, you get the dollar spike. Will yields spike? Yes, yields will spike. You get a triple spike from the triple forces, right? I call them the macro forces. If you get those three forces spike, that is the bear case. That's the bear case, plain and simple. That's all you got to know. Forget earnings. It doesn't even matter. If those spike, the market's going lower because valuations go down. The dollar crushes the market, and oil brings more uncertainty for the consumer. And now you're looking at recession a lot quicker and a lot faster. And then you're going to look to how does the Fed respond to this? But if the Fed responds by cutting rates, you could have, a knee-jerk reaction. That's the bear case. The bull case is lower GDP actually means yields have peaked. Yields peak. Okay, the dollar peaks. It starts to come down. The macro forces have peaked. They're starting to roll over. Manufacturing still picking up because the war doesn't escalate in a way that causes panic. It does escalate, but there's more communication, and I'm sure there's so much communication going on. There's not going to be any big surprises from the war. Big surprises are going to be a problem because the market prices in uncertainties really quick. But if there's more certainty, if there's a lot of good communication, as in, okay, well, Hamas is negotiating for this and blah, 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 and Iran and blah, blah, blah. So if we get that negotiation, I think the market can be okay with that, as and macro forces can ease a little bit. I hear there's a lot of supply and low demand out there. Global liquidity is picking up in global markets. The Fed is actually at pause. And when the Fed actually does announce the pause, November 1st, I believe, yields could drop, and that could cause the dollar to roll over. Oil doesn't really matter. Well, it's the wild card, as I said, and stocks valuations go up, and the premium stocks, even crypto assets are gonna get another tailwind there. That's the bull case. That is the bull case. I'm trying to think if I'm missing anything. Also, earnings for earnings. Also, it's sell the news, right? Earnings are not as bad as we thought, and stocks go higher. That's kind of the bull case here. But I think it's the macro forces, guys. I always stick with those: oil, dollar, and yields. Where are they headed? Where are they headed? One of the biggest winners this month is a decentralized exchange built on Cosmos called Injective Protocol. Yeah, that thing was moving. I saw that. Moving. I mean, crypto's moving. Crypto bull market is here. In my view, I think the crypto market is here. It's back. The crypto market is back. All right. So, guys, look out for why yields, bro. Why yields? Because bond yields, 10-year bond yields are really the big headwind to stocks. Look, the higher yields go, the yields are literally the cost of capital. The Fed funds rate, just as a quick lesson, the Fed funds rate. So when the Fed hikes rates or whatever they do with rates, that's a 24-hour rate. That doesn't directly impact S&P 500. It indirectly impacts it because yields could go higher or lower depending on what the Fed does. So the bond market or bond yields are the actual interest rates to the market, because those are interest rates from 1 month all the way out to 30 years, right? Affecting mortgage rates way out, 10-year rates where a lot of companies borrow, and then 2-year rates where most of the economy borrows at. So the bond market, bond yields are more important than the Fed actually right now. Okay? So if bond yields go higher, that is going to push down valuations for tech stocks, because tech stocks are valued into the future. If the rate of interest into the future is higher, then your earnings growth is lower automatically. Right? So that's why yields are important. Also, if yields break out, what they do is they make the dollar more attractive, and they make the dollar, they incentivize you to go to the dollar. Dollar goes up, you're down, right? So that's why yields are the big story. If the war accelerates and oil goes to 100, but yields drop, markets can still recover. Yields, I think, are the most important. I don't think they really drop significantly though, because I don't know at this point. We're kind of week to week at this point. We're week to week, right? We are week to week. So we'll just keep track of the actual prices and the new narratives that come out. But one thing's for sure, employment is not falling apart. So you're not getting a recession. I don't think we get a recession. Just because GDP fell doesn't mean recession. It's just not as high as it was. It's going to be the full year GDP forecast that gives us, recession or not, Q1, Q2. And then you got Joe Biden in there. You think that fool's not going to, his approval rating is super low. How do you get your approval rating up? More stimulus, right? More stimulus. I think that's going to be the answer for him. If the next SPY rally doesn't hold SPY to 378, yeah, it makes sense. Here we are. We're in dire circumstances again. Let's go ahead and find that support. You said 378. Wow. Dang, just skipping so we're coming all the way back down to banking crisis levels, basically. Come on, Carbides, you that bearish? I think we have I think we still have this support right here. This was debt ceiling support, basically. Right. Also KRE. That's what I was gonna go over really quick. What do we have? I'm out of time here. I am running out of time here. CLF. I want to see KRE because the further this thing falls, the more pressure on the banking system, and the Fed will have to step in. And I think we're gonna get more liquidity. I wouldn't doubt it. As the market falls, collateral is falling, and the Fed is definitely. The Fed is definitely gonna pause. The question is, what does the rhetoric look like? Tech still pretty much holding up here. If you look at the tech sector, it's still at near all-time highs. Like that's a signal. SMH, they're gonna get stimulus. This broke out and then broke back down. So communication is down. Industrials retesting the lows where they were. But industrials also are going to benefit to some degree. Caterpillar, I like Caterpillar. Let's see what they look like from all the growth. Caterpillar's chugging along here. Like I don't really do industrial stocks, but if I did invest or try to trade industrial stock, it would be Cat. Pulling right into the trend. Okay. Pulling right into the trend, probably oversold. And also you have fiscal policy coming into play here. Earnings, you have more fiscal. It's coming. More fiscal is coming. Healthcare taking a dump. Who's this? Biotech taking a dump. Consumer discretionary. Who's this? Consumer staples. Retailers, they're holding on a little bit. Oh, wow. That's a big bid into utilities. Okay. So utilities are up today. Defensive positioning. Real estate looks like trash. Commercial real estate is probably going to pop too. We'll see. Construction buildings down. This price target is based on the ascending channel break. If there's a snowball effect, panic can set in and take us lower. Yeah, panic will take us a lot lower. I think we're getting panic right now, in my view. I think we're seeing the panic right now. My technical analysis on this just posted on the Discord. Okay, cool. Yassine, is NASDAQ a tech indice? Yes, NASDAQ is a tech indice. QQQ/NQ for the futures. NDX for the index. NDQ for, I don't even know what that is, NASDAQ 100. And then would you say, how about Dow Jones as an indice if yields go high? Look, if yields go higher, Dow Jones is getting hit because they have a lot of interest rate sensitive companies. Tech is kind of hard to value because when it comes to like the Mag 7 because they're kind of value stocks. They're not just high growth, high beta, interest rate sensitive stocks. I mean, they're kind of staples, right? They're kind of staple stocks at this point. COF Capital One gapped up. Interesting. Let's see. Hey, I'll have a report. I'm going to get the earnings from, go check out FactSet. They should be releasing how many stocks are beating earnings. I think they might have done it right now. So go check that out. I will have a newsletter out. So if you guys are new, go check out the newsletter, subscribe, link in the bio, link in the description. That'll be out tomorrow. This is important. We got to see kind of what's going on here. And I'll show you the fundamentals, some technicals, some macroeconomic factors going into the next week. I still think the most important thing is, what is the Fed going to do? What are they going to say? And how do earnings end the season, right? How do earnings end, at least for the mega caps coming from Apple, right? Let me see something real quick. When does NVIDIA announce? NVIDIA is probably going to be a big one. Not till November 21st. Wow. Okay. So you got Apple pretty much next week. November 1st, November 2nd. So you get the Fed November 1st. You get Apple November 2nd. And then you got 20 days until NVIDIA reports. What you could see is a run-up. Of course, I'm bullish. You get a run-up, and then NVIDIA reports something nasty, a pullback and a move higher. Or we just keep collapsing until NVIDIA earnings. That could be it, too. We'll see how it plays out. But watch those macro forces. If yields go up, that's risk off. The higher yields go, the more pressure against the stock market. The higher yields go, the higher the dollar probably goes. All right, guys, I'm out of here. I gotta get going. Stay tuned to that newsletter. Also, I'll be live tomorrow. I'm also, if you're on TikTok, we're gonna move the fitness live to 4 p.m. on Fridays. Okay, so get your workout on Friday night, so you can look good for the weekend. whatever. Stay healthy. Anyways, we're going to do that fitness live at 4 p.m. And I appreciate you guys. I need to go get a haircut. Look at this. Okay, I'm about to go get a haircut. Missed it yesterday. Working too much. No, I'm just kidding. Anyways, you guys stay blessed. Have a safe weekend. It's Halloween weekend. You know, please be safe out there. Okay, there's some crazy stuff going on. Be safe. Take care of your health. Okay, don't do it. Stay safe, whatever you do. Have fun, though. All right? What happens to Fitness Live? We just talk about fitness. Any questions for fitness, right? Health, losing weight, gaining muscle, how to work out, whatever it is. We're going to do that Fitness Live today at 4 p.m., which is 7 p.m. Eastern time. Okay? Just check us out on TikTok. You should see us go live. Check that out if you're interested, you know, in getting some tips or whatever. Other than that, I'll catch you guys later. Stay blessed.